The global stock market came back. Why this is a good opportunity to buy and where exactly we want to buy the market is something we want to talk about. So stick with me and have a closer look. Yes, as I've mentioned before, the situation seemed to be quite well in the global stock market, not only in the US, also other markets, for example, the European one, and also some in Asia are in a good mood. They came back and moved really strong, but it's not the same situation for all markets, so it's really important to have a closer look which is the best opportunity and which to spare out. I want to start with the US market, but I will go around the globe and we'll have a closer look at the European market as well, the FTSE 100, for example, and the German DAX, but also some Asian, the Tokyo market, the Hang Seng, for example, in Hong Kong. We have a really good opportunity in many of them. So as I've mentioned, let's start with the American market. And in this case, other than typically, normally I like to start with the Dow Jones. In this case, I prefer to start with the Nasdaq 100. In this case, this is a future contract. You can see NQ is the shorting here, the symbol. It is 0622. So it's the June contract. Of course, we had the expiry of the old contract a few days before. So this is giving us a fresh set of future time ahead, and we see some really strong recovery from all the downcoming here, and you can see in a weekly chart that we've reached at least the 38.2 Fibonacci level. Of course, many of you know these levels, and of course some people are asking me, is this true? Is the market always turning around that level? No, it's not always turning around at that level, but very often many market participants are orientating around these levels and saying, okay, let's stop selling short, for example. Let's stop taking profits or reducing risk at that level. Let's go on the buy side, at least a little bit, or spare out some more short sellings. And this can turn the market. It really often does so. And in this case, you can see that we really have some good days, 4 days in a row with a strong setup. So you have this fast mover here, fast mover, one day a little bit slower, but the next one also fast mover. If you're wondering about these blue levels here, these are the BORN bars here, a trading system we have implemented for ourselves. You can see we reached our minimum target already. But this is a situation, it's done already. You can see that we have another one on the weekly chart. I don't want to mention this too strongly here, but if you're following these BORN bars here, you have a trading opportunity as well from this blue levels here. If you want to have more details, just contact BORN-4-Trading and you get more details on that as well. But I want to stick with the chart technical pattern in this case, which is indicated really a strong one. You can see this here from that part, and even easier in the 4-hourly chart, which I like to see as giving me a good overview what the market is doing intraday as well, and also in the outside of the normal market hours, because a future contract, of course, is going roughly 24 hours a day. Not a day, a week. no, a day. I'm sorry, but every day. But Monday, Sundays and Saturdays. Oh, this is really awesome. So Saturdays and Sundays, of course, there's no pricing here, but all the other days, nearly 24 hours every day. So what we're seeing here is a really strong move into this direction. This is giving me the hope, or an indication, that this one is a really strong move. Of course, what shall I do otherwise? So what I want to see now, and which would be really typical, is some corrective setback. And you should keep in mind, corrective setbacks normally are going back and forth like this. So forth, back and forth. It's a 3-wave pattern, an ABC pattern. Very often it is like this. Let's go a little bit to the theoretical side. You can see if you have a strong movement into one direction, very often you have a short break, which is an ABC pattern. You have this in many types of movements. This is also a strong movement to the upside, an ABC pattern, and after that a continuation to the upside. So exactly that's what I wish for. So that we have now time for a breather here, which is not necessarily looking exactly like this. There are many forms of a corrective pattern. A very typical one is something like an ABC pattern like we've seen here. If this really occurs, which is not given by 100%, but which is really typical, you can at least expect that this, what we've seen here before, is continuing once more. Let's go back to the theoretical things. If you have one here, you have an ABC setbacks, you can expect this one as a follow-up situation. And sometimes, not really rarely, you don't only have this C wave here, the last wave here in this case. Sometimes, if this is the first wave, you have a corrective pattern here and the second continuation. So you have a first, a second, a third wave, and after that even a fourth and a fifth wave. So we have, in this case, we would have two really nice trading ideas or situational ideas, that the market is coming down in a corrective pattern, continuing, and from that point maybe even continuing further, having another break and continuing even more to the upside, which is a quite bullish situation because this looks like a 5-wave pattern, which is really typical. It's the main trend pattern and indicating that there's more to come, so that we will see new all-time highs in this case. This can happen. However, it is tough to absolutely say clear, yeah, this will happen in the near future, because it may occur that the market around this level, if you have the first wave, the second and the third wave here, the market may turn around and decide into the other direction. Of course, this may happen. Many people are asking anyway, why do you think that chart technical analysis is telling us what the situation in the world is? We know we have many influences, of course, from the US Fed, the Ukrainian situation currently, the war situation there, and some others from the Chinese maybe coming along against the sanctions with the Russians. And these are so many really strong impacts for the market, or can bring strong impacts for the market. It is really tough to exactly know what the market is doing next. However, in case the market participants are having a breather, having a pause, something like a corrective pattern here, they are indicating, no, we believe we have a chance for a continuation. So it is not like seeing into the crystal ball what is coming next. It is more like reading the mood of the market participants. And if they are not strong on the downside, breaking these interims, this mid-level highs here, we can expect that this is ending this corrective pattern, not in any chance, but this is indicating that this is only a counter trend movement, and you can expect that the market is at minimum continuing something like this again. Of course, it can be a little bit less, but if you're reaching these levels here, I'm quite sure you can trail your stop to some nice profits, or small profit at least, or at least to break even, so that you don't have to fear any losses anymore. So this is a raw indication what the market is giving us here. What can we expect instead of this? It not necessarily needs to be something like this. It can be something like this. Something like back and forth, looking really corrective-like. If you compare this one to the upside and this one to the downside, of course it can also look something like this. Just give you some different ideas how it can look like, so you can clearly understand. It looks a little bit more like a bull flag. Some people are calling this pattern like a bull flag, and you can expect that if the market is breaking through this last high here, that the pattern will be roughly exactly the same. This is giving us a non-strong situation to the downside. You can interchange. They are looking quite similar. Of course, this is an ABC pattern. This is something a little bit more weird, but you can see this is not the main trend coming currently when the market is breaking through this level, as I've mentioned before here. You can go long on that side. Does it necessarily need to come exactly now? No, of course not. It can occur exactly at that very moment. So maybe from the very start here on Monday, it may occur like this. But I can imagine that the market is continuing a little bit higher first, and then something like this is coming. The situation would be exactly the same. Expect a setback, preferably into these levels drawing from the very low to the highest point. This is just an idea. Please don't get the number here. Just see the idea that maybe the market is turning here. It can turn here. It can turn here or any other place. But whenever you have a lowest point, which is here, the low from 15th of March, and the highest point here on, which I don't have currently, then you have the chance to draw Fibonacci. I draw it from the current situation, the lowest point, the highest point. And in case a corrective pattern is roughly reaching this area, 38.2, 50%, maybe even 61.8, it can a little bit less, it can be a little bit higher, but roughly around these levels here, or this area like this. Then you can say this is a valid corrective pattern compared to this strong movement, and you can think of the continuation. Of course, if the market is first continuing a little bit higher, you have to redraw this from here to here. All these levels are getting a little bit higher because of the measurement is a little bit different. The box will be a little bit higher, but the raw idea with the corrective pattern is the same, and also with the entry and the continuation into the upside. So that's the easiest, one of the easiest trading ideas. And if the market is giving me something like this, I definitely want to join the bull market here in this case, entering a long position and expecting at least minimum of one-on-one projection of the first part. So something like this here, I've drawn this a little bit too short to be honest, but something like this here, again here for the second part. And from there, maybe I take profit, which is something I like to do. Or I trail the stop, or what you can also do is sell half of the position, taking profits of half of the position and hoping the best for the second part. And if the market is turning around, you can easily stop it here, maybe around the break even, and say, okay, I at least have some profits from the first part, but the second part was harmless because not hurting my account anymore. So these are different strategies. If you like to hear a little bit more about that, we can talk about this in the future in a deeper way, but this is easy to follow. Yeah, but what about a completely different situation? Is this the only thing what can happen? No, it's not. There's definitely a good chance that the market is not coming down in a corrective manner, that the market is coming down strongly. We never can, we never know ahead that this is not possible. The good thing is we would never buy this market because there's no intermediate high. There's no reason to estimate this as a corrective pattern. So as this is an impulsive move here, the same like this one, it is best choice to wait for something and like a counter move like this to do exactly the same here. To do exactly the same here. What I've talked about you in this long situation here on a daily or in a 4-hourly chart, it's exactly the same situation. Only difference is that this is a strong movement to the downside, a corrective pattern to the upside, while the first one was a strong movement to the upside and a possible weak movement to the downside, a shaky one to the downside. So this is really important to understand. Some people are saying, okay, he's expecting something like this. Maybe I'm not able to watch the market closely. I just go long here because he said, this is a nice trading idea. The market is going up. No, that's wrong. The trading idea is definitely not to enter the market at that point, because after such a streak here to the upside, I would expect that the market needs a breather anyway. Unfortunately, I don't know whether this will occur or not. I see a good chance because we have some highs here as well, which is giving us something like a resistance area or level here around that. I would not be surprised that, or if the market is turning around nearby this level here. But it's not a promise, it is just an idea. I don't know what the market participants are thinking on Monday, but I see the chance that this will happen here, and if not here, as I've mentioned, maybe from higher levels as well. So a really good trading opportunity. How does it fit into the big picture? It is fitting nearly perfectly, because even this one, only to this level here, which is roughly 15,000, I can imagine that the market, after this first movement to the downside, coming back in an ABC pattern to 15,000, and leading us once more to the low side. So that's a reason why I have a close look at these levels, roughly 15,000. It's not 100% at that level because we don't know how big this part is. We don't know exactly when this part ends. So we cannot exactly estimate where this is, but roughly in this area here. And the only reason, or one of the main reasons why we can think about this is if you have this strong movement to the downside, you typically would expect that the market is moving ABC-like into this area here. So you see it's exactly the same argumentation I've told you here on the 4-hourly chart for a bull movement. It's exactly the same situation here for a possible continuation, ABC to the upside, to once more into this area here. This is not given. I don't want to condition you for only thinking that this is the only chance that the market is doing that, but I think we have still a good chance that the market is going even lower, maybe 12,000 or below that. So I think it is quite a good idea to keep your mind open, not to be stuck with one market direction too much. Just trade the market from corner to corner. And if you're not willing to be too active, if you're not able to watch the market closely every day, if you want to trade the big picture, at least when reaching these levels here, trail your stop to your entry around break even. Not necessarily exactly break even, can be a little bit higher or lower depending on the situation, but roughly there, so that you can say, I stick with the position if the market is continuing. Wow, great. If the market is not, nothing bad happens. I don't lose money because of this situation. So I'm really sorry talking about this situation so long here in the Nasdaq future, but I think it's really worth it because this is a situation which is looking really nice here with the Nasdaq 100. Let's switch to some other indices, in this case the S&P 500, and you can see this is also ES. This is the typical E-mini S&P future contract, also the June contract. And roughly you can see the situation might be the same or become the same here with the S&P 500 in the big picture. I don't want to talk about this in detail. You can just see by my drawing here what the possible idea is. And you can also see that the market here had a strong movement to the upside. A little bit different is that this is other than in the Nasdaq. In the Nasdaq, this was the lowest point here, so a new start. Unfortunately, in the S&P 500, the lowest point was here. So it looks a little bit like a corrective pattern by itself. And this might be also the reason why we maybe soon, maybe on Monday, in the next few hours, we will see a turnaround here. And there it depends very, very much whether we get something corrective, which is giving me the same idea here like in the Nasdaq. I would prefer trading the Nasdaq because of this being a real low. Just switching back, you can see this is the real low, this is higher. S&P is vice versa, this is lower and this is higher. So I would prefer the Nasdaq for my trade. But this is also something possible here. As long as this is corrective, this one was really strong. I would think buying this market is way better than selling the market. However, if the market around these levels here, around this uptrend channel, roughly wherever it is exactly is, it does not need to be exactly at that point, but around this level, and the market is coming down really strong in a shaky way to the upside, you of course understand I would sell short the market, at least for this one again. And if you have some supports from the trend channeling line, from the oldest low, you may think about this taking profit situation like I've mentioned before with the Nasdaq. So raw situation is roughly the same, so it's no use to dig any deeper here in this case. The Dow Jones is also roughly in this situation, but you can see it is not exactly as good, and it's even getting worse compared to the clearness of the picture with the S&P 500. The raw idea is the same. However, it looks a little bit like an overshooting situation here, but you can also see it's not only that this is not the low, this is the low, and this is the last one here. So it is maybe something, only a small setback and another continuation to give me a 5-wave pattern here as well. And I don't like to trade the 5th wave so much because the fifth wave is not necessarily the longest one. And it might be quite short, like the first one, for example. So in this case, I wouldn't like to trade this one. So if I have the opportunity, and I have normally, to switch between all these contracts, I would switch not to the YM here. This is the Dow Jones, the E-mini Dow Jones future. I would switch to NQ, which is the Nasdaq future. And if you don't like to trade the future or not being able to do so in some countries, you can trade something like a CFD or other contracts on this. Maybe this is helping you for your trading decision in any way. So the Dow Jones is a little bit different. I see some kind of a support level still here around this level. So it is not given that the market is doing exactly the same. Some people are wondering, shouldn't they move in the exact same way? No, they don't need to, because the Nasdaq, for example, is a really high-tech orientated market, and we all know that the high-tech market is way more related to the interest rate situation. So I think we should keep in mind that the Nasdaq may have a completely different outcome, and the S&P 500 is a little bit a mixture of both markets. However, the high-tech companies, the big high-tech companies, have a big weight there, so they are overweighting a little bit the tech movements. So that's the reason why they don't move in sync exactly. But of course, more or less they should fit together, but not in the latest details. So expect that there are some deteriorations between all these markets. However, in this case, I would think of, if this is a small setback here, this is maybe something comparable to this one, and you have a 5-wave pattern here, and so it's a little bit earlier with the target. I'm not sure about this one, so I would skip this one. My focus here is definitely on the Nasdaq. So let's switch to some other markets. Let's go to the German DAX and the FTSE 100. It's quite easy to understand how they work because they are looking quite similar. And you can see that we have seen here, this is the index. Of course, you can check the same with the future. Oh, let's switch to the future market maybe to have it a little bit more similar. And you can see here that the movement in the daily chart looks quite strong. What I think is a little bit more confusing is the internal pattern, especially with the future contract. I have to talk about this because the future contract is in Germany is nearly 24 hours. There's some spare time in the night time, so it's not as long as the American futures. And there's some other difference because the whole world is watching the US American futures at nighttime, and some of them are trading them. However, the German market is really much more affected by the daytime movement. So in this case, I would overstress the situation of the daytime movements, which is leading me to an observation of the index. However, it's not a big deal, not a big difference between all these contracts. However, it looks a little bit like it is a strong movement to the upside. And if you want to check more of the details, it might look like a first, second, third, fourth, and maybe a fifth wave. 1, 2, 3, 4, 5. So an extended fifth. We call it an extended fifth. This is something possible. However, the all-in-all situation here seems to be quite strong. So also in the daily chart, what I would expect is if the market, this is not a promise, but if the market is giving me the ABC pattern, it is roughly exactly the same situation we've talked about in the Nasdaq. So if you are sticking with the German market and saying, I prefer to trade something like this, maybe because of European time zone, wherever you are in the world, of course, if you prefer to trade the German DAX, then this might be something really interesting. If the market is breaking this level, expect some strong movement like this here continuing into higher levels here and maybe leading us back into the highest levels here, 16,000 or maybe even higher. I don't want to promise this because I saw something really bad because we are breaking into this corrective pattern area before with this one, which is not giving me the perfect mood for a bullish market. It can, of course, lead us to higher levels here as well, leading us into an ending diagonal here, something like this. This is possible, but this part here currently is indicating we have still a chance for higher prices, very much depending whether we get something corrective here or something like an ABC pattern, which is ABC pattern or shaky, which is giving us this one. If this is not occurring, if the market is giving us, for that part, you can just draw this one. If this is a one mover, one way move, or one wave move without any ABC pattern or something like this here, shaky pattern here into the downside here. If you don't get this, if this is a strong one, I would definitely prefer to look for some short opportunities. So keep this in mind. The situation is a little bit different, but we still have a chance to buy the market. On the lower prices levels here, you can see, or price times, you can see this is still corrective. This was a strong one. So it is, once more, it's possible that at least at the beginning, Monday, we have a continuation to the upside. I'm not sure about this, but things like this are giving us an indication it's not the right time to sell short the market at that very moment. Let's switch to the FTSE 100, which is roughly the same, but if you see here, this is some future contract here. You can see that this one looks a little bit more like a 5-wave pattern, and this is giving me a better indication that if you have something like an ABC pattern, you have a continuation to expect here. It is the same like the Nasdaq. You can do your own homeworks, draw your own things here, and you will you can compare to my drawings in the Nasdaq, for example, or here, and you will come to the same conclusion, or more or less to the same conclusion, that we have a good chance for a continuation here to the upside. I think this is worth it, having a closer look in the next few days. So what about Asia? In Asia, we have at least two markets which are quite interesting currently. One of this is the Nikkei. The Nikkei 225 in Tokyo is giving us a good indication that the market, from reaching the typical corrective pattern area, which is reached here a few days before, the market has the best opportunity to turn around now in the big picture, ending this corrective pattern situation here and giving us a new opportunity to entering the markets on the bull side. To enter the market on the bull side, I want to have a strong movement to the upside and a weak movement to the downside. So let's have a closer look on a daily chart, or even better on a 4-hourly chart. And there we can see it seems that the first part may be just a good start for something really strong and a shaky pattern to the downside and a continuation. But you can see it is a little bit different from what the market is doing currently. Why? We had a first movement to the upside, this one, the second to the downside, the third wave to the upside, which is quite long compared to the first side. To the first movement here. So what I prefer here would be something, a small setback here, coming around a little bit and then moving up again. So this would give me something like the 5 pattern movement, which is exactly something 1, 2, 3. Here we are now, waiting for this part, waiting for that part. After that, the ABC pattern, and then we have a really good opportunity to enter the market on the bull side. So currently, I think the Nikkei 225 is doing a quite good job, but it's too early for me to enter the market, because even if we have a small setback like this, similar size like this one maybe, I would only expect the 5th wave here, and after that, some period of time. It's not very long, but may last for a few days. And after that, we should expect the continuation to the upside, which is giving me quite a nice idea that maybe from that very point, we can expect something really, really big to 30,000, 32,000, so for new highs. I don't want to promise it now, because we are missing so much information here, which needs to come up in the next few days. But I think we have the first basement of what I need to see to give me these opportunities. But in this case, it's a little bit too early to react. You normally want to have the first movement, similar like here in a 15-hourly chart. You can see this is also occurring on very low time frames. First movement to the upside, ABC to the downside, expecting a continuation here to the upside. This is something I like to see. This is the first wave. Yeah, but this was lower. Yes, but you can see, if you think this is something interesting, you can just check. And you can see, going back in time, we came from above. So this is a really good starting point. First wave, ABC, continuation. So you see, Nikkei 225 is quite interesting, but not at the very best in the very best shape currently, especially compared to the Seng index, which is the index in Hong Kong. And Hong Kong is completely different from the rest of the world. It's a little bit separated. Nikkei 225 is more combination or more in sync with the Western markets. However, the Chinese market, or in this case, the Hong Kong market, is a little bit different. You can see this from the previous patterns we've seen here. We had a severe setback to some support levels here around the low of 2016 in February. So this was a good opportunity if you are an early buyer of the market because of a support level. I normally don't do that. I want to see the market prove an idea. So I'm not sad that I missed the opportunity to buy here. Why not? Because the market came from above. This is a real low. So what I want to see is ideally something like a 1, 2, 3, 4, 5 wave pattern, a corrective pattern in the aftermath. And keep in mind, size-wise, use something like the Fibonacci's, expect something 38.2, a little bit higher, a little bit lower, maybe even 61.8, something around this box here. And the good news is, if this occurs, you can expect this one when breaking these levels here, which may lead us into a longer bull run here, into higher grounds, but minimum into this area here, maybe 24,000 here. This is not given because we don't know where this is. It may last a little bit longer. It is possible that this streak will continue a little bit higher and then we have the setback. Don't be sad. The longer this is, the good news is, the longer the part is you've missed after correction, the longer the continuation will be. So if you have the feeling, I missed so a lot, in the future, be happy and say, cool, I missed that much. So this should be same size. The longer the first part here is, the longer the second part should be. And so I have a better opportunity to enter the market here in this case. So you see, the trading idea in most indices is roughly the same, no matter where you are globally, whether you are in a European country, in the US, or you want to trade the Asian markets, or you're living there. It is the same situation for all of these markets, but we have a different synchronization between. Nikkei maybe it's a little bit too early to react now. In my eyes, I think the better chances are here in the Shanghai, not in the Shanghai, in this case it was Hang Seng for Hong Kong. But you could see that we need some setback first to give me, first of all, a lower price for entering the market. That sounds good. We are traders, so we want to have a price, a little bit a sale price. So getting it a little bit cheaper. And the second is, it's also something like a confirmation that the market is coming down in a weak manner, which is indicating that buying is still the better side for your own trading action. So I hope this is helping you for your own trading decision. I hope this is helping you for learning about how we as a trader are looking at the markets. I wish the best, the very best for the next few days. Crossing my fingers for you. Stay safe, trade successfully.